Good morning, everyone. Thanks for signing up for our webinar about the CARES Act Paycheck Protection Program. I was just on the phone with Stella, who was going to give a quick intro, although now that I look at the list, it appears somehow she has been disconnected from the webinar. So I think the best course of action would probably be just to get started. So we've had about 90 people register. Currently, there's only 36 on here, but we all have busy days. So we will continue, and hopefully people can join as we go. So to start, an intro about myself. My name is Riley Gardner. I'm a senior credit analyst at River City Bank. I manage a commercial loan portfolio of about $180 million. I'm also the third generation member of Kelly family and the only one who works within the bank on a day-to-day basis. My Aunt Sean is the chairman of our board. So it's important to me to help contribute to our community in the Family Business Center and help everyone through this difficult time that we're facing with the COVID-19 crisis. So first, a disclaimer. Of course, the opinions expressed in this presentation represent those of the presenter and do not represent the official policy or position of River City Bank. In no way should this information be construed as advice or guidance from River City Bank. Moving on. So what is the CARES Act? The CARES Act provides funding for various sectors of the U.S. economy. In particular, there's substantial support for small businesses. What we're going to be focusing on today is the SBA Section 7A loan program, which is being called the Paycheck Protection Program, which provides $349 billion directly to small businesses. So what is it? Who's eligible? Eligibility is available to businesses with 500 or less employees. I'm sure a lot of you have seen these things already, but we're going to run through the key details. You can get a maximum loan amount of up to $10 million, but for most businesses, it's functionally going to be 2.5 times your average monthly payroll. And we'll go into the details about what constitutes that payroll. The other key component of this is that you can use the funds on payroll, rent, utilities, and mortgage interest. In addition, the loan is potentially 100% forgivable, provided funds are verifiably used on approved uses, and at least 75 of those go to cover payroll costs. One other thing to touch on as we go, we have a Q&A function with Zoom that I would invite you to provide your questions through. And Stella, I believe she's on here, will be monitoring as we go. And at the end, we'll go back and address some of the questions in there. We also got some questions prior to starting, and those, many of which will be addressed in the presentation. The ones we don't, we can talk about at the end. Finally, availability. The SBA is authorizing banks, credit unions, and other commercial lenders to make loans under this program, and they're also providing 100% guarantee of these loans. So what is the loan structure? Originally, there was a bit more flexibility within the legislation itself, but based on the most recent SBA guidance, what we're seeing is that the term and interest rate will be standard at 2 years and 1%. There's no fees for either the business that's taking out the loan or the lender who's originating the loan. Payments are deferred for 6 months, though interest will still accrue during this period. There's no collateral and there's no personal guarantee. So this is a pretty unique program in terms of it's a very low interest rate, and it's potentially all forgivable, which is naturally driving the extremely high demand that we're seeing for this program. So in terms of process, I would imagine most people have heard a bit about the process. and each bank may be somewhat different in terms of how you would submit an application and the supporting documents. But to give an overview of the whole picture, basically, the small business would submit a loan application to their bank or other approved lender. After this, the bank will review and submit for bank approval internally prior to submitting to the SBA, at which point the SBA would provide approval. Currently, as many of you have probably heard, there have been issues with the rollout of the program, and in particular, the SBA platform that's used by banks and lenders to submit these applications. So a lot of the applications right now are bottlenecked at this point right here. Our bank was approved yesterday, and we were submitting applications starting yesterday afternoon past midnight and continuing this morning. But as you can imagine, the large volume of stuff has been difficult for the SBA system to handle. So after the SBA approves the loan, the lender would then issue loan documents to be signed by the borrower, after which the funds from the program would be dispersed to the borrower directly from the bank in the form of the loan. So after that, provided the funds are spent on approved uses, which we'll go over, in the 8-week period following origination, then the borrower can submit a request for loan forgiveness to the lender, along with documentation of how they use those funds on approved uses. The lender would review and make a decision, and they're required to do so within 60 days. They will submit a request to the SBA for loan forgiveness, and the SBA is required through legislation to remit the forgiven amount to the lender within 90 days, at which point the lender would cancel the remaining outstanding portion of the loan that was not formally, or excuse me, that was formally forgiven. So eligibility. A lot of people have had questions about eligibility, and there's been some conflicting guidance with respect to the original legislation and the SBA's guidance. This has been clarified more specifically. Generally speaking, a business with 500 or fewer employees is going to qualify. You could also qualify if you meet the SBA's size standard. There's on the SBA website, there's a table that has either employee numbers or revenue numbers that would be the traditional criteria to qualify for an SBA loan. Nonprofits also qualify. If you're an individual who operates as a sole proprietor, that would qualify. Independent contractors qualify. There was a question about this in the registration. In our understanding, independent contractors would have to apply separately. This isn't necessarily something where a business who uses independent contractors can apply and count their I guess you could say income payments as payroll, because it's typically or technically separate. And so the independent contractor would need to apply on their own for the program. Tribal businesses, veterans organizations also qualify. So the next question, and we're getting into some of the finer details of the program here, is how do we calculate the loan amount? So we tried to simplify this as much as possible, and there's a number of details with respect to each of these blocks on this slide. But the gist of it is you take the sum of all included annual payroll costs, you deduct the sum of excluded annual payroll costs, you divide this by 12 to calculate a monthly average, and you multiply this by 2.5. So a couple things to consider: salary, wages, commissions, similar compensation, cash or tip equivalents, all included, payment of benefits such as vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, so severance, healthcare benefits, retirement benefits, state and local taxes assessed on compensation. All of these things count. So generally speaking, it's going to be most of your payroll costs. A few things that were explicitly not included would be compensation of any individual in excess of $100,000. There's some ambiguity around the language of legislation and guidance with respect to whether or not it's $100,000 in total compensation or $100,000 in salary. We don't make a specific recommendation as a bank on what is correct, but that's something that you would like to consider while you're filling out the application. Kind of what we've been hearing is that both could be justifiable, but we would tend to err more on the side of conservatism when completing the application. Another thing that should be excluded are federal employment taxes and income taxes that are withheld from employees. So specifically Chapter 21, 22, and 24. These are specifically referenced in the legislation, though are absent from both the SBA final guidance and the application form. So this is another one that's somewhat debatable. Again, use your best judgment when completing the application. Another component, any compensation for employees outside of the US or any sick leave or family leave that would be allowed under the Families First Coronavirus Response Act. So approved uses. And this is important because we all want to make sure that the loan funds will be forgivable. So approved uses are essentially the only things you're allowed to use the funds that you take from this program on. And there's a list of potential consequences if the funds are used for anything else. So payroll costs, very simple. This includes benefits, rent, and utilities, although both of these need to be for either lease agreements or utility services that were in place before February 15th. And finally, interest. This applies to interest on any mortgage obligation. This also must have been in place before February 15th, 2020. Notably, it does not count towards principal and cannot be used for example, prepayment of principal or principal reduction payments. Importantly, the loan will be 100% forgivable provided funds are used on these approved uses. Additionally, and this wasn't in the legislation but came out after the fact, at least 75% of funds must be used on payroll costs for the loan to be forgiven. At the same time, one thing to note, loan forgiveness isn't necessarily an all or nothing thing. From what we've seen based on the language of SBA guidance, it will be a portion. So for example, say you use less than 75% of the funds on payroll, you're still eligible to have a portion of that loan forgiven. So getting into the details on how to calculate the loan forgiveness. The other thing here that you'll want to consider, and which is also the goal of the program, is to maintain your current levels of employment or salary. The program is specifically designed to reduce the forgivable loan amount based on the reduction in employees that may have occurred, and you can calculate the potential reduction in the loan forgiveness amount by the following calculations. And we'll provide you this presentation at the end so you can reference it after the fact. There's a lot of information on this slide, but to try to go to the basics of it, we're looking at basically the sum of the approved uses of funds multiplied by the number of full-time employees for the 8-week period beginning with loan origination, divided by either the number of full-time employees from February 2019 to June 30th, 2019, or the number of full-time employees at your business from January 1st to February 29th of this year. And so essentially what they're calculating is you're multiplying the sum of approved uses of funds times a fraction that's calculated based upon whether or not you maintain your same number of employees. For seasonal employers, this will change a little bit, and the calculation method's on there as well. So the other component here, which we mentioned, is you need to maintain salary levels as well. And so in that case, the calculation with respect to salary is the sum of approved uses of funds minus the amount of any reduction in wages greater than 25% compared to the most recent full quarter for any employee that did not earn during any pay period in 2019 wages at an annualized rate greater than $100,000, right? So essentially, you can't reduce any of your employees' salaries by more than 25% and still expect loan forgiveness under the program, at least at the maximum rate. So another question, and this is one that came up in the registration, is where do we apply? The legislation specifically provides for you to be able to apply at federally insured deposit institutions. So this is going to be FDIC regulated banks, federally insured credit unions, farm credit system institutions, and other SBA lenders. So this list includes big banks, community banks, credit unions, some fintech companies, a whole host of participating lenders will have access to the program. That said, not all banks are treating this program the same way. We've heard a whole spectrum of feedback from both our customers and other people in the community, and in the media for that matter, about what different banks are doing. We've heard some banks are putting caps on how many loans they will do. Some banks have already reached those caps. Some banks have decided that there's not enough clarity with the program, and so they are waiting until there's more clarity to begin. Some banks are just so overrun with requests that they're unable to field all of them. So what we would typically recommend is contact your bank as soon as possible. Be aware that many banks have limited or delayed their participation in the program just due to the high demand. Some of them, including us, and probably most, have had problems with the SBA electronic application system. It's been taking us a while to get through the uploading of applications. That some banks are concerned about the contradictory guidance from the SBA relative to the language of the CARES Act. There's a lot of liability for banks here. And then the other final thing is a lot of banks are lacking the resources to process such a high volume of requests in such a short time. And so, specifically from my experience, our team's been up past midnight for the past few nights in a row working on applications for this program. And I imagine there's a large number of bankers across the country in a similar position. We're all trying to get small businesses in our community access to the funds, but it has been a large challenge due to some of the issues with the program so far. So moving on to the application process. What will you need? So one, you will need a signed SBA Paycheck Protection Program application. There were a couple different versions of the application. The most recent one that was put out was SBA Form 2483 04/20. We have heard that the SBA would be accepting both this application form and the previous one, but we have been recommending to use the most up-to-date version. Again, the situation is still somewhat fluid, but we've been submitting applications with this form. Separately, you will also need to provide supporting payroll documentation for the period used to calculate applicable average monthly payroll. And so typically, this is going to include third-party payroll and benefit reports. It may include tax reporting documents. It may include internally compiled, detailed payroll data. Essentially, lenders need to be able to verifiably establish that the payroll figures that you report on the application are accurate and supported by data. There's many references to tax reporting documents. So in many cases, it helps banks to have some of these payroll tax reporting documents. For new bank customers, in addition to the items on the left, banks would also need to review entity documents for your business, new customer information consistent with regulation bank policy. So this is just going to be personal information, address, phone number, tax ID number, standard information that you would provide a bank to open a new account. Banks will also need to complete a certificate of beneficial ownership. These days, this also includes, unless you're doing it in person, sending a copy of the IDs of the individuals listed on that form to the bank for verification. And then not all banks will require federal tax returns or annual financial statements, but because this is a new loan relationship for many banks, and a base level of underwriting standards still apply, many banks, including ours, are requesting federal tax returns and annual financial statements. Certifications. A couple things that you need to know with respect to the program is the program is designed in order to provide funds to existing businesses to keep their employees with the business and in jobs and be able to cover their payroll. So with that in mind, while applying for this program, you're required to certify a number of things, including one, your business was in operation on February 15th, 2020. Economic uncertainty makes the loan necessary to support your ongoing operations. The funds will be used to retain workers or make other qualified payments. You will not receive another loan under this program. You will provide appropriate documentation to the lender, and of course, that the information on your application is accurate. Many of these things in the current economic climate seem, especially the economic uncertainty, seems to make applicability of this program to small businesses pretty universal. But just be aware that this isn't free money for you to do whatever you want with. There are very specific conditions and uses for these funds that you will be committing to. Again, we've talked about a few of the issues with the rollout of the program, and there's a lot on this in the media. So inconsistent guidance on eligibility requirements, inconsistent guidance on the average monthly payroll calculation and tax withholding, issues with the SBA system for getting the loans into the program, the burden of typical BSA, AML regulations, which make the new customer onboarding process relatively cumbersome for banks, which has slowed down the ability of banks to take on new customers and process these applications. And then another big thing is just the general fear among small businesses of potentially not getting access to the program before the money runs out. We've seen a lot of that. And I think over the weekend, there was a lot of progress in terms of guidance on the program, in terms of more banks getting access to the system. I know us specifically, we went from not knowing how to treat certain items on the application and not having access to the system to successfully submitting applications over the course of the past couple of days, and we've really picked up speed with that. So I would imagine that across the country, banks are starting to get more access. But what comes along with that is a lot of money is going to be earmarked for specific businesses in this program as these applications go through the SBA platform, and it's going to lead to greater urgency among businesses who want to take advantage of the program. So these are just a couple examples of some of the guidance. And the only reason I bring this up is because this may be relevant to specifically completing your application. And I touched on this a little bit in previous sections. I wanted to highlight the specific language from both the legislation and the application and final guidance on a couple issues so that you can make an informed decision when you fill out the application. We're all dealing with the same source information here. So one, it has to do with the average total loan payments. In this case, the legislation specifically states the average total monthly payments by the applicant for payroll costs incurred during the 1-year period before the date on which the loan is made. So in this case, it would seem to indicate you would be relying on a trailing 12-month payroll data set for using this calculation. However, on the SBA application and in the final guidance, the application states that most applicants will use the average monthly payroll for 2019, excluding costs over $100,000 on an annualized basis for each employee. So in this case, we really have, a contradiction between these two, and what our bank has been accepting is essentially however our customers interpret this. We think potentially that both will be acceptable because there's enough ambiguity and contradictory guidance that it seems that both are consistent with either the law itself or with the application. The other component here is withholding taxes. And in this case particularly, while the legislation seems to state that this should not be included in the average monthly payroll calculation, on the other hand, the application and final guidance state that only the federal employment taxes imposed or withheld between February 15th, 2020 and June 30th, 2020 should be excluded. And so people are interpreting this different ways. But for example, from the application final guidance, if you used calendar 2019 payroll data, it would appear that it would not be applicable to deduct these federal withholding taxes. That said, if you look at the legislation, it appears that it would be required. So in cases like this, it's an extremely large program. There's going to be a very high volume of companies that utilize it. Essentially, each business has to make a determination for how they want to do this. I can't speak to how different banks are handling this, but in our case, we are trying to be flexible with the fluidity of the guidance and allowing our customers to make a determination. So we still have a few minutes for questions. I would like to open this up to see what questions you may have. I'm going to go pull up the Q&A list here and see what we have. So the first question is, will we get a copy of the slides? And the answer is yes. Stella will have a copy of the presentation, which I believe she can send out to everyone on this list. Otherwise, I could likely also send it out. The second question is, will RCB prioritize applications to their customers first? If I'm not a client, what do I need to do to get an application submitted with RCB given BSA restrictions? And yes, that's an excellent question. So one, I would say from a bank perspective, we certainly want to help as many people in the community as we can. That said, we do have an extremely high volume of requests from both existing and new customers. So far, we have successfully processed a number of applications for new customers. Typically, these have involved the business bringing all or a portion of their banking relationship to River City Bank. So I would say I can't make any blanket promises on if we could do your application, but if you give us a call, maybe we could help. And then here's a question on the timing of SBA approval docs and funding. I would say from our perspective, after an application is submitted to the bank, we try to get through it as quickly as we can, obtain internal bank approval, and then submit to the SBA. Once the application is submitted and taken by the SBA system, our understanding is that those funds are essentially allocated to that business within their system and deducted from the total amount of available funds under the program. So once you're in the system, we think that you have access to it. Then the question is, how long does it take to get loan documentation drafted, signed, inputted into the bank system, and able to disperse funds? We don't have a definitive answer yet. I'd say our goal is likely a couple weeks for that, but just because we have so much demand for this and because it's a new process, it's hard to give a definitive commitment on that. But I would say banks in general are trying to move as fast as they can because we know businesses in the community need support. There's one question on here. Does a 501c6 qualify? I don't specifically know that it does not qualify, but I have not seen specifically that it does in any information I've seen. But again, I would look more into the details on that. Another question, are employer payroll taxes included in the calculations, i.e. Social Security, SDI, unemployment, etc.? And I would say this is a good question. And this is one that there may not be explicit guidance on out there. I would say, generally speaking, these would be included in the payroll calculation, but I would take a close look at how the guidance is written when you complete the application on that application and make a determination for what you include or do not include. Next question, if we use 100% of the loan for payroll only, is the whole portion forgiven? And the answer to that question is yes, provided the loan is used only for approved payroll, and with another condition, you maintain current employee numbers or current salary levels, then yes, the loan will be 100% forgiven. Next question, when the moment is appropriate, can you explain how seasonal employees shall be handled? I think we may have already covered this, but if we have further questions on this, maybe we can follow up offline. Here's another question. If we are a new PPP borrower, How long will the BSA process take given your current workload? Uh, this is a difficult question, and it's not necessarily how long will the BSA process take, but how long will it take the bank to get to your specific application? I would say each application probably takes a few hours of work on the bank side just to have reviewed, documented, and approved prior to submission to the BSA. So this is probably going to be something that's a bank by bank um, answer. But in our case, I would say the BSA process doesn't take all that long in terms of onboarding. It's just a lot of documentation to go through. If we have an employee who receives 104,000 annually, we can claim 99,000, correct? And the answer on that one is yes. I believe you can claim um, up to 100,000 for each individual employee. So you essentially deduct all payroll in excess of $100,000. Again, pay attention to the salary versus compensation versus benefit components of that. But you would, yes, deduct that from the total. Yes, the slides will be made available. Will these loans be included as part of borrowing-based certificate calculations? This is a good question. I don't know how other banks will be doing this, but I could see a case for not including this as part of a borrowing base calculation due to the fact that there is a 100% SBA guarantee, and due to the expectation that provided you are an operating small business and intend to retain employee and salary levels, that the 100% of the loan would be forgivable. So in that case, banks may treat this in different ways, but I could see a case for excluding it. There's a question on here in regards to guidance on federal treasury loan program for larger businesses. We haven't focused on that as much because we're so involved with the Paycheck Protection Program right now. But I know there are funds allocated under the CARES Act, but I wouldn't be able to give you useful, relevant data at the current time. Next question is 2 to 4 weeks a fair estimate on time to receive funds? Again, this is really hard to answer. I'd say our goal is a couple weeks, but we're still uncertain for how this process will play out. So it's very difficult for a bank to make a firm commitment, but I would say 2 to 4 weeks is likely a fair estimate. Next question. For an employee whose compensation is more than $100,000 per year, is everything up to 100K eligible, or is the employee excluded completely? Excellent question. Everything up to $100,000 is eligible. That employee would not be excluded. Next question. We have someone who's skeptical about the loan forgiveness. How can we learn more to better ensure the highest portion of forgiveness? I think the key here is if you maintain your employees and maintain their salary levels, the loan should be expected to be 100% forgivable. I can understand there's probably a lot of doubt around that being possible, but I think the intention of this program is to provide immediate, meaningful support to help small businesses continue paying their employees. Pat Polling thanked us for our help. Thank you as well, Pat. We appreciate you. Following up on a new client question, if I submit an application today as a new client, when would RCB be able to submit to SBA given BSA work, app review, etc.? Will the monies be gone from the program by the time it gets submitted? And that's a good question. It's very difficult for us to say how fast we could get through a new application. Our team has been maxed out. I was up till 2 a.m. Submitting PPP applications last night, and jumped out of bed to submit another one this morning. It really is all hands on deck for us. So with the amount of work we have, it's hard to say when new applications come in how fast we could get through them, but we're definitely doing it as quickly as we can, and we're trying to help all of our customers get access to this program. Next question, are financial needs considered to receive funding? For example, if we have reserve funds, will this affect whether or not we qualify for the loan? The answer here, to my knowledge, is no. The program is specifically designed to help employers retain employees. So in this scenario, for example, in my opinion, and from a logic perspective, even if you had sufficient reserves, if your business dries up overnight, it still may be a prudent decision to reduce your payroll. And so the goal of this program is to maintain payroll levels across small businesses in the US to keep workers employed and keep these businesses healthy, so or at least surviving. So in this case, there's no specific restriction around whether or not you have reserve funds, but you do have to certify that the economic uncertainty caused by the current time makes the access to these funds necessary. Another question, what if we already had to lay off employees or reduce their salary? Should we rehire or bump salary back up to full amount? Yeah, that's a good question. And this component specifically has to do with the percent of the loan that will be forgivable. So for example, and take a look at the dates with respect to the calculation for loan forgiveness. And it really depends, what your full-time employee count was at this time last year compared to what it was at the beginning of this year. If you have experienced a significant reduction in employees from either of those time periods, if you do not rehire those employees or bring back salary levels, then the percentage of the loan that's forgivable will be significantly reduced accordingly. So that's something you want to look at in terms of calculating how much a loan will be forgiven. Next question. Forgiveness pertains to payroll costs for 8 weeks from the application date. Are there provisions for longer than 8 weeks if everything is closed beyond 8 weeks? That's a good question. Currently, the legislation only provides for 8 weeks. I would imagine if this crisis goes on significantly longer than the 2-month period contemplated, that there may be some sort of extension or additional support. But at the current time, there is no specific provisions for using those funds after that 8-week period. Next question, how does RCB work with agents in the loan process? Currently, we have not worked with agents in the loan process, or specifically on the Paycheck Protection Program. We do work with mortgage brokers on, for example, commercial real estate loans. So we are familiar with this process. The program actually does provide for agents or I don't know if brokers is the right word used in the list, but it does provide for third parties to be able to help businesses prepare applications, and they would also be entitled to a fee that would be paid to them by the lender, not by the small business. So there's no fees for the small business still in here. Again, we haven't worked with any in the process, but I know it's definitely possible for agents to help out. Next question, at what point does business apply for the forgiveness? At the end of the 8 weeks. Yes, that's correct. From our understanding, and we can go, I don't know where the slide is, but yes. So once the funds are all used on approved uses during the 8-week period, which would be called the covered period, then the borrower can provide documentation to the bank showing that the funds had all been used properly and request loan forgiveness. That said, because the percent of loan forgiveness calculation is based on, in some cases, potentially the employee count at the end of June 30th, actually I believe in all cases, then I would expect you would need to wait until June 30th to be able to effectively calculate the percentage of the loan that is forgivable. Looks like we have a couple more questions. No, I think that's it. So thank you everyone for attending. I still have not been able to see if Stella is on or able to talk. I know she wanted to mention a couple things. Stella, are you there?
Hi there. Can you hear me? Hello.
Hi, Stella. We can hear you.
Hi, fantastic. Thank you. Do you want to switch it to the last slide for me?
Yes.
I'd like to thank everyone that participated today, and I want to thank you, especially Riley, for putting this presentation together and articulating it so clearly. And thank you to River City Bank for being fantastic members of the Family Business Center. Next Monday, we're going to have another webinar at the same time. We're going to be talking about the Families First Act and the coronavirus response. So that's going to be next Monday at 10 a.m. It's going to be presented by Robert L. Rediger of Rediger Labor Law. So you will be able to register online for that. We'll be sending out an invitation in tomorrow's Tuesday email. Thank you.
Okay, so thank you everyone. Wish you all the best during this crazy time. Stay safe and healthy out there. And if you have any questions, feel free to contact me. Thank you.
Thank you, Riley.